Welcome to this week's episode of Jonathan on Money. This is episode number 120. First off, what an episode number. Instead of updating you on my Tisha B'Av experience, which is not that interesting, or spend time discussing what I broke my fast on, which was a toasted flat everything bagel with tofu cream cheese, everything bagel flavored lox, arugula, onion, and tomato, which was totally geschmack, by the way, I'd rather spend a moment discussing why the number 120 is noteworthy in Judaism. So there is the Jewish phrase, may you live to 120, which is rooted in tradition and layered with meaning. And here's why the number 120 holds special significance. There's a biblical origin. In Genesis, God declares that the human lifespan will be limited to 120 years. This sets a symbolic benchmark for a full blessed life. Moses or Moshe's lifespan, the Torah records that Moses lived exactly 120 years, and his life is seen as the ideal model of spiritual and physical vitality. It's also a cultural blessing, which I just mentioned, saying till 120 is a way of wishing someone a long and meaningful life. It's often used in birthday greetings and when speaking about someone's future. This number has become more than just a lifespan, it's a metaphor for living fully, ethically, and purposefully. All that being said, I like to give all listeners and viewers of this podcast the bracha or blessing that they should live a rich and healthy life full of bracha and mazel until the age of 120. Okay, one quick note before I get started today, which is my upcoming fall live webinars will start on September 4th at 8:30 a.m. And the first topic is tax issues with distressed real estate. Should be very relevant in this market, featuring Matthew E. Rappaport of Falcon Rappaport and Berkman, based in Long Island, New York. And I'll be sure to include the registration information in the show notes to this episode. Okay, now let's discuss today's agenda. And my talking points this week will discuss timely and timeless financial wisdom from Mishlei or Proverbs. Our quote this week is from Peter Lynch on anticipating market corrections. I'll spend the last half of the episode answering listeners' questions, including does going away for Passover offer a good ROI, or return on investment? And finally, we're going to end with an actionable idea to implement to your investing life, where I'm going to discuss the folly of not understanding the true limitations of money. With that, let's jump into this week's talking points. So, one of the best books for guidance and introspection is Mishlei, known as Proverbs in English. It raises questions about values, moral behavior, and the meaning of human life. For anyone looking for perspective during these turbulent times, Mishlei is worth exploring. In addition to providing insight into various aspects of one's daily life, Mishlei also offers perspective on one's financial affairs. This money wisdom is timeless and practical even in today's economy. I'm going to highlight several key lessons drawn from these verses. And the first is to work diligently. In Proverbs, it says, the hand of the diligent makes rich. I'm reminded of this phrase regularly when working with clients. This teaches us that a consistent effort builds wealth over time. Many of the most successful clients are not the folks with the highest income. Rather, they're families who've accumulated their wealth slowly. Over many years, they were assiduous about saving money every paycheck and invested it prudently. Over decades, these funds accumulated into a seven and sometimes eight-figure portfolio. It doesn't require magic to build wealth. It just requires diligence. The next idea is to reject get rich quick schemes. It says in Proverbs, wealth gained hastily will dwindle. There isn't a week that goes by where a friend doesn't call me about a deal he heard about from a friend in shul. It's always exclusive, and they explain how they were lucky to be offered a friends and family discount that will surely multiply their money within only a few years. Remember, one of the key components of financial success is to avoid big mistakes. If something sounds too good to be true, it probably is. If you learn about investment that can increase your wealth rapidly, that means you will be taking on a high level of risk. Risk and return are inextricably linked. Stick with boring investments and don't fall into the trap of trying to get rich quickly. I also see this concept come up within the context of one's career. It seems like everyone has a side gig. The accountant dabbles in money management, the doctor dabbles in real estate development, and everyone is a part-time social media influencer. Most people will have far more financial success by refraining from these side hustles and focusing on becoming more proficient within their area of expertise. Slow and steady wins the race. Next idea is to save consistently. And it says in Proverbs, go to the ant. It stores its provisions in summer. Folks need to have enough cash in their emergency account for a rainy day. If your compressor breaks this summer or you need a new roof, an adequate cash cushion will help you avoid sweating the unforeseen expenses. Additionally, purchasing proper insurance coverage to protect against the death or disability of the family's breadwinner can be a lifesaver. Finally, saving 10 to 20% of your paycheck in the decades leading up to your retirement will give you the option of not working or cutting back meaningfully once you approach your 60s and 70s. Always remember the lesson of the ant by building your financial reserves during times of abundance. The next concept is to avoid debt. As it says in Proverbs, the borrower is servant to the lender. This is a verse that is often quoted by financial personality Dave Ramsey. While I don't agree with everything Ramsey says, this is certainly a point where we have similar views. The people who are in the best place financially are those who are not indebted to anybody. Sure, taking out a reasonable mortgage to buy a home may be sensible. Perhaps a small, short term loan from a bank that is quickly repaid to start your business may also be prudent. However, other forms of debt on your personal balance sheet should be avoided at all costs. You can't get ahead financially with the mountain of debt weighing you down. And the next concept is to plan ahead. It says in Proverbs, prepare your work outside, get everything ready for yourself in the field, and after that, build your house. The concept here is to prioritize your financial foundation before making major financial commitments. A healthy cash flow is the cornerstone of personal finance. It's imperative you position yourself to earn a livable wage while you're young by attaining proper schooling or training before launching your own business or career. Taking time to learn and develop the proper skills. This foundation sets a person up for success, allowing them to earn enough money to live their life without having to rely on others for financial support. The next concept is to practice integrity. It says in Proverbs, dishonest money dwindles away. As any business may at times feel the urge to cut corners to temporarily help them their bottom line. However, the best way to progress in one's career is to grow your business and wealth by always conducting yourself with honesty. Over time, your reputation of trustworthiness will help forge relationships and lead to financial success. Excuse me for that beverage. Be generous is the next concept. A generous person will prosper. Whoever refreshes others will be refreshed, as it says in Proverbs. The concept of tzedakah is not novel. It's one of the most important mitzvot that every child is taught starting in nursery school. However, in the chaos of life, it's one of those things that is easy to overlook. It's important to periodically review your finances to ensure you're giving at least 10% of your net income to charity. In addition to supporting the wonderful causes and helping folks who are down on their luck, the act of giving also fosters abundance and community. The next point is seek wise counsel. As it says in Proverbs, without counsel, plans fail, but with many advisors, they succeed. I was especially excited to read this verse since it advocates the benefit of hiring a financial advisor. Hiring a professional to guide you in the area with which you're unfamiliar makes sense. A competent advisor can help you avoid mistakes, offer recommendations to achieve your goals, and provide broad perspective that the average person does not possess without years of experience in a specific field. Even for people who do have a background investing, an advisor can offer benefits similar to those of a chavrusa. They'll hold you accountable, challenge your assumptions, and motivate you to stay on the right path towards financial success. The book of Mishlei reminds us that wisdom itself is more valuable than gold. Accumulating a nest egg isn't just about the numbers. Financial success is about making thoughtful, principled decisions and avoiding mistakes with your money. May the teachings from Mishlei empower us to make the right decisions to improve our finances and guide us through these turbulent times in the market. Okay, those are the talking points this week. And as a reminder, you can be notified of all my recent articles, webinars, and all the work I put out by subscribing to my free monthly newsletter at parkbridgewealth.com/newsletter. This week's quote is from Peter Lynch. Just to refresh your memory, Peter Lynch is one of the most legendary investors in modern history, best known for managing the Magellan Fund at Fidelity Investments from 1977 to 1990. Under his leadership, the fund delivered an astonishing 29.2% average annual return, consistently outperforming the S&P 500 and growing from $18 million to $14 billion in assets. His books include One Up on Wall Street and Beating the Market, and they remain staples for investors seeking practical, accessible guidance. And after retiring at age 46, which I could retire at 46, Lynch focused on philanthropy through the Lynch Foundation, supporting education, healthcare, and religious organizations. Lynch's legacy lies not just in his performance, but in his ability to demystify investing for everyday people, making him a household name in finance. And Lynch once said, far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. And this quote highlights the futility and potential losses associated with trying to time the market. It suggests that anxiety and actions taken by investors attempting to predict market downturns or corrections often lead to greater financial loss than actual market corrections themselves. And years ago, I had this prospective client who was thinking about opening an account with me, and he admitted that he was so traumatized by the financial crisis, which happened years earlier, since he sold at the bottom because he was nervous and never got back in. He shared with me that he was sitting on $9 million of cash that had accumulated over those 12-year period because he was too scared of investing the money since he was worried about the next market downturn. In the meantime, he could have at a minimum, doubled his money had he not tried to anticipate the next market drop and instead put it into place in a systematic way by investing his funds. Consider this a cautionary tale to all listeners. Don't try to anticipate the next market downturn. Instead, work with your advisor to get your money into the market. Your future self will be thankful for this decision. Okay, now let's jump into this week's financial questions. And if you do have a question, feel free to submit it to me and it may be answered in a future episode. Okay, first question. I posit that going away for Pesach is a great return on investment. Great food, entertainment, no cleaning. Would you disagree? So it depends on your personal situation, how you define return on investment or ROI. In financial terms, ROI measures the profitability of an investment by comparing the gain to its cost. So in this case, if you can afford to pay for this Pesach program out of your cash flow without sacrificing how much you are saving in your retirement accounts, and you and your family have a blast, then that sounds like a pretty good return on investment from a lifestyle perspective. However, if you're borrowing money or neglecting your savings to go on a Pesach program, that is a low return on your investment from a financial perspective. Additionally, there is also an ROI compared to other vacations. Going away for 8 days on Pesach, surrounded by Yidden, restrictions on food, and jostling at 5 buffet meals every day costs a multiple of what a non-Pesach vacation costs. If you think about it from that perspective, you're likely getting a lousy return on your investment since you're paying 3 to 5 times compared to going away on any other time during the year. Some may say this makes you a sucker, and you may argue that going away for Pesach and the fact that it relieves so much stress in your life is totally worth that trade-off. I know you probably expected me to blow up and say how financially imprudent going away for Pesach is, but that's not my style. When breaking down the various factors and depending on your perspective, going away for Pesach may or may not be a good decision and a good return on your investment. Next question. I aim to allocate 30 to 40% of my total investments to companies based in Israel. In the past, I've done this through iShares MSCI Israel ETF, ticker EIS or ICE. My main concern with ICE is its relatively high expense ratio of 0.59%. I've grown accustomed to the lower cost ETFs. Would it be possible to replicate ICE's return by directly purchasing its top 10 holdings, or would that be too impractical? And if so, should I simply accept the higher cost, or are there other investment options worth considering? So I think your suggestion is creative but impractical. ETFs are rebalanced internally, and for you to replicate the exposure that the ETF is getting and maintain the correct weighting on the index to the Israeli market will be very challenging and may also incur trading costs that you're not factoring in. There's a variety of Israeli ETFs on the market, but I'm not sure if any of them are cheaper or offer the same broad diversification. It's not a recommendation to buy or sell this particular ETF that you mentioned. What I'm saying is you could try buying and holding a few large Israeli stocks, but that comes with individual company risk. There are trade offs with every decision. Nothing is optimal. Owning one of the Israeli ETFs certainly seems more practical than the strategy you're suggesting. Another thing, I would rethink your 30-40% allocation to Israeli investments. The market is less broad and less diversified than the US. I'd make it a satellite holding and not a core one. Okay, the next question. Over the past 2 years, my parents started aggressively gifting money to my whole family. My question is, what should we do with this extra cash? We want to be smart with our decision on how to allocate this money. So the answer really depends on your goals and needs. If you have debt, especially unfavorable debt, I would consider paying that off first. Next, if you need help with current bills, non-discretionary items, I'd use the money for that. Assuming your cash flow was also solid, I'd then consider using some of that money to save for the future. If you're already saving adequate funds for your future, perhaps you can use funds to help your kids either through their investment accounts or 529 accounts, if that's important to you, which it may not be. Finally, if you have money left over or don't need the funds for any of the aforementioned items, you can use some funds to spend on yourself. Remember, the Rishonim teach us money is a tool, not a scorecard. Use it to enhance the life of yourself and your family. Next question. Is it tacky to suggest that my friend's parents make contributions to my child's 529 college savings account instead of giving presents to him? Um, Tacky may not be the word I would use. Weird as hell would be a phrase that seems more fitting. I understand how saving money for college is more useful than buying some piece of crap present that your kid will forget about within an hour of opening it. However, if your kid is young enough to have kids bring birthday gifts, he's also probably young enough where it will spark major joy in his or her life. Don't deprive your child of that momentary joy, even if it seems short sighted. Furthermore, it's your responsibility to save for your kid's education. It's not the responsibility of the parents or friends that come to your child's birthday. But kids, so try to be normal and have a regular party with the standard crappy gifts and figure out a game plan to pay for your child's higher education without bothering other parents who don't bear that responsibility. Okay, next question. Are there any morning routines or life hacks that you notice from your most successful clients that you could share that may be helpful to people earlier in their career? These folks probably have a similar routine that many people listening or watching this podcast also implement daily. This includes one, morning transcendental meditation sessions, two, cold plunges, which I'm sure everyone does, three, journaling, four, expressing mindfulness, five, reading poetry to your partner, six, a short 5 mile run and weights every morning, seven, another cold plunge, eight, cold shower, nine, skipping breakfast, i.e., intermittent fasting. 10, attacking the day, and then an 11, indulge in a mid-morning and only meal of the day of bone broth, spinach smoothie, and supplements. Personally, my morning routine is a bit different since I am a low-performing individual. This includes looking at my phone immediately, getting dressed, getting stressed out of my mind by an email I received, stumble into the shower, a hot shower I might add, get dressed. I actually always prepare my clothes the day before, which is a minhag that my mother taught me when I was in elementary school. I then go to shul where I continue to look at my phone and even get more stressed out. I come home and make my kids breakfast, make my kids lunch, take the kids to school, drink coffee, usually spill some of it on my shirt, and then attack my day. The key to every routine is planning ahead, discipline, and consistency. And these are the same attributes that allow you to build wealth over time and 10x your business, life, and portfolio. You could follow me more for helpful guidance by buying my 10-part course for only $9.99, where I teach more secrets to perfect your morning routine and enhance your life. That's a joke. I have no course yet. Okay, that's it for financial questions this week. And by the way, if you have a more involved personal finance situation, please feel free to reach out directly to me, and perhaps my team and I can help you. And the best way to get a hold of me is via email at jonathan@parkbridgewealth.com. And finally, I'd like to end with a timely and actionable idea that listeners and viewers can implement to their own financial lives. In today's time, the idea is a warning for not understanding the limitations and real impact of money. So, as most people know who are listening to this, I work with the wealthy, the children of the wealthy, and the soon to be wealthy. And what I've noticed is that many people think that if they can just make enough money, their problems will go away. And there will be harmony in your household and your relationships will be better. Unfortunately, that's not how it works. What actually happens when you come into a large sum of wealth is the following. Minor problems become magnified until they are major problems. Small things you wouldn't ordinarily be worried about when you're stressed out about money now become the big things once the money stress goes away. Having lots of money doesn't change you. In fact, it reveals what you really are. If you're an anxious person by nature, just wait until you see what having $10 million sitting in cash will do to you. If you're a jerk, the money's going to make you unbearable. And if you're generous, the money's going to help you change people's lives. Some wealthy people will feel forced to make new friends because it becomes harder to relate to the people who have been in your life for a long time. May not be able to do the things that you now want to do. You may begin to think that you're somehow better than them. Perhaps people in your innermost circle may begin to despise you, even if they don't show it, even if you do nothing to provoke it, even if you help them. The bottom line here is this: once you've succeeded financially, you've only just begun to succeed personally. The ultimate wealth is contentment, which can be achieved without any money at all. And with that, it's a wrap for this week's show. Any comments or questions, feel free to reach out directly to me via email. I love hearing from my listeners. And finally, the secret to financial success is no secret at all. It's to spend less than you make, invest the difference prudently, and ignore all the noise. See you next time on Jonathan on Money.